Welcome to ISE's Equity Index Weekly Outlook, a weekly outlook on ISE and other industry indexes, hosted by Patrick Seresna, a derivative market specialist and investment manager with extensive expertise in options and the broader derivative markets. ISE trades options on more than 15 proprietary sector indexes, as well as broad-based indexes and a variety of licensed benchmarks. ISE continually enhances its trading systems and develops new index options products to provide investors with the best marketplace and investment tools to trade smarter.
Hello and welcome to the ISE Equity Index Outlook for February 28, 2011. This is Patrick Seresna. As always, we start off with a chart of the S&P 500 using that SPDR exchange traded fund symbol SPY. We had our focal point up at that 134, 136 area up along the upside, and we marked off that area as an area where we anticipated there to be a short-term market high. We obviously had a news-driven market correction on the downside, driven by what was happening in North Africa, but essentially we had a reversal on Friday. The question now becomes, how does this all play out? The correction's coming right off the right level where it was supposed to. The question becomes, is this the beginning of the deeper correction, or whether this is just a short-term break before the market makes one more leg back to the upside? This week will actually play a pivotal role, particularly Monday and Tuesday again, in terms of determining how this is playing out. This current 133 area where we're trading into marks an area where if we have a rally early in the week that fails and reverses back down, we could find ourselves very quickly down at the 127, 128 level on the downside, and that would probably mark off a profit-taking cycle that will probably take weeks, if not months, to actually finish playing out as the S&P does a series of backfilling moves to kind of rebase itself. In the same regard, if we have a scenario where Monday and Tuesday come out very strong and we have the ability to get right back up into that 134 area on the upside, we can't rule out the possibility that we go all the way even up to the 136 or even 136.50 area on the upside, and then come off again to start creating a topping formation. Overall, from a price action perspective, we do have some targets that do potentially go as high as the 138, 140 area, and we certainly cannot rule out a rally up into there, but I actually do not believe that that is a likely scenario. In the bigger picture, I think that we're going to see some sort of topping formations, whether we're going to see the development of head and shoulders patterns, double tops, or even sideways consolidation points. I don't believe in the bigger picture that there's much more upside on the S&P here. Doesn't necessarily mean that the market is just going to start crashing from here, but also there's probably only marginal upside left on the S&P. Next here, I want to take a look at the ISE U.S. Regional Banks Index, which is symbol JLO. That sell-off last week really flipped this index downwards, creating selling all the way down into what's this 124.50, 125 area where the lows came in all along January. This is again the same type of a critical situation. This will probably trade very similarly to the S&P in a sense that if the S&P rules on Monday and Tuesday and starts another leg lower, we probably will see those regional banks breaking all the way down to 124 or 123.50. But it's in the same regard, if the S&P makes it all the way back to the previous highs, then this 25 level could mark a short-term low and have it swing all the way back up to the previous highs. Again, the first few days of the week are going to be very important, particularly for the bulls to try to recover the damage that was done. If there's a failure of the bulls to show up for a reversal, then the bears will jump on that and force another leg down. Next here, I want to take a look at the ISE Index, which is a symbol SIN. This is an index of all the casino, tobacco, and distiller companies. And this index in particular, in a very big picture way, was already at major highs. We weren't anticipating too much more above that 135, 137 level. And even though we couldn't, in the past week, rule out that it was going to come up for a double top retest along the upside, what is clear is that once the selling started, this really broke down all the way down to that 125, 127 focal point on the downside. In the bigger picture, this is probably a bigger topping formation on this index. We can't rule out retesting of previous highs if the market stays relatively stable, but in the bigger picture, we don't have very much optimism that this index will have any new robust rallies. Next here, I want to take a look at the ISE Home Builders Index, which is symbol RUF. Basically, when those housing numbers started coming out in the middle of the week, we had a very sharp drop in the home builders and essentially almost a gapping move that way that you see on the charts here. Now that we're consolidating down at these lows, this is again a make it or break it moment for those home builders. If they can't recover that gap on the upside and we have any failures, then those home builders will all roll over and sell off again. Just some significant negative price action here. This 950 to 970 is a very critical moment level on the downside. That's where all the Fibonacci retracement zones lie. If we have anything that breaks those levels on the downside, it may mean that these home builders could go all the way down to their previous lows around that 8,850 area. So it'll be very important if the bulls want to maintain any chance that the home builders can reverse. They really need to dig in and hold that 950, 970 zone on the downside. Next here, I want to take a look at the ISE Natural Gas Index, which is symbol FUM, and this natural gas index has just had some very robust strength, and it's obviously been driven by a lot of these energy companies being bid up during the oil crisis in the Middle East and Northern Africa. Really, at this stage, all the measured moves we have on the upside are complete on the natural gas index, but if there's event-driven catalysts like we're seeing, we can't rule out the possibility that the natural gas index does what we call an extended move, which is being driven by that catalyst news. That means we could see targets 140, 145 on the upside. But really, I find it difficult to be wanting to be invested in this natural gas index without there being a correction. Anyone that's currently long, one strategy that you can utilize is to buy a protective put along the way to ensure that the downside has been locked in while you continue to have all of the upside potential in the index. Finally, I want to take a look at the ISE Mini FTSE 100 Index, which is a symbol UKX, and we have a distinct sideways channel here on that FTSE between the 590 and 610 areas. This will be very critical to see what happens if the whole S&P and all these global markets start reversing on the downside. FTSE will fail to rally back up to the previous highs and subsequently begin a sell cycle that could see 560, 550 on the downside during that selling. But at this juncture, we don't want to rule out the possibility that it's going to go back to its previous highs if that's what the global markets are doing as well, particularly things like the S&P 500. So we'll be watching what happens here, but really distinctly you want to treat this as a range-bound market for now. That was your ISE Equity Index Outlook. Thank you for joining me.
Thank you for participating in this week's session. Please join us again next week. For more information about Patrick Ceresna and to sign up for free index options trade alerts, visit www.optionsource.net. To learn more about ISE index options, visit us at www.ise.com/indexoptions.